please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I view us as where we want to go is be the Amazon of mobility.
India is a huge opportunity on the digital side, but we must have our focus on managing risks simultaneously.
When issues take place, it doesn't matter, who's involved in them. It impacts all of us.
I think there is something about the spirit of the Indian people that's unique here to other parts of the emerging world.
Good evening and thank you so much for joining us on India Business Hour. I'm Kritika Saxena. Over the next 60 minutes, we will get you exclusive interaction with the likes of Donald Trump Jr., Global CEO of Uber, Chairman of KPMG International. But first, let's start with the top story this evening, and this is the latest from the PNB issue. The government has actively stepped in to take stock of the alleged 11,400 crore rupee fraud at Punjab National Bank. The Corporate Affairs Ministry has moved NCLT to freeze and attach all immovable and movable assets of Nirav Modi and Mehul Choksi. Also, the Finance Ministry has written to 4 banks, SBI, Axis, Bank of India and Allahabad Bank, asking them to check for irregularities at their overseas branches in Hong Kong. Remember, the letter of undertakings illegally issued to Nirav Modi was submitted to branches in Hong Kong. We also learned that the Enforcement Directorate has frozen accounts worth 30 crore rupees belonging to Nirav Modi. Shares worth close to half that amount have also been frozen, acting on a tip-off. The ED has also seized over 170 steel covers and plastic boxes containing imported watches. The ED is also likely to begin seizing properties belonging to Nirav Modi and Mehul Choksi. While these fresh details emerge, employees of Gitanjali Gems are protesting outside the offices of Gitanjali Gems in Mumbai. This follows similar protests by employees in Hyderabad earlier this week who have been demanding alternate jobs. But let's talk about an exclusive in this very scam. Heads may roll after the final outcome of investigation in the PNB scam, but can't paint all the banks with the same brush. That's what top government and finance ministry officials tell CNBC TV18. Sapna Das has been speaking to various departments within the finance ministry to understand if there are plans for an immediate rejig in the management of public sector banks. Let's bring in Sapna Das with the details. Sapna, what exactly is the plan over here?
Well, it's part of the cleanup process. Very clear indications coming from the government quarters that yes, whatever action is required will be taken, probably even in terms of rejigging, managements of public sector bank boards. But having said that, very clearly the government is insisting that they will wait for investigative agencies to come in with their reports where the responsibility has been fixed. It's not that decisions are going to be taken arbitrarily, because that's not the way the system can function. And right now the government is clearly focused on the recovery part of it. These actions are going to follow suit if they are required. So A, they will wait for the investigative agencies to fix the responsibility, only then they will go forward. Also, they have clarified that the Bank Board Bureau has absolutely no role to play in this. So very unlikely that they're going to take the BBB's inputs as to what needs to be done in terms of possible management rejigs. Any kind of this decision is going to be completely at the government's level. So that's very clear. Apart from this, they're also saying that yes, heads will roll if the responsibility is fixed by the investigative agencies. But again, everyone cannot be painted with the same brush. This line is very important. It gives a lot of perspective on this entire matter. Apart from this, they're also very clear about the fact that under the Banking Regulation Act, there are certain very clear sections where the role and the responsibility of the RBI is very clear. So probably a bit of a question mark on that front. Down the line, it won't be surprising if the government comes up with further policy measures to enhance the level of accountability in the banking system. Last but not the least, a clear advisory has gone out from the government to all the public sector banks that they need to reconcile their LOUs and come back with a certificate.
Industry bodies CII and FICCI have called for enhanced supervision and monitoring of public sector banks after 11,000 crore rupee fraud at Punjab National Bank came to light. The CII has issued a 3-point prescription which includes privatization of PSU banks, asking the government to reduce its stake in a phased manner. But just yesterday, the All India Bank Officers Association wrote a scathing letter opposing privatization. The letter attacks the Chief Economic Advisor Arvind Subramanian, who pitched for privatization in the economic survey. The letter reads, and I quote, quote, in what way the chief economic advisor has improved the economy. He's talking about privatization. Does he want to hand over the banks which have been looted by corporates to them so that they can loot even further? FICCI has also put out its report suggesting that while it supports speedy action against unethical and illegal business practices, it also believes that reducing the government shareholding and eventual privatization of public sector banks is perhaps the need of the hour. Joining me now is the president of FICCI, Rashesh Shah. Mr. Shah, I appreciate you joining us here on CNBC TV18. Whether it's CII or FICCI or ASSOCHAM, all of you are pitching for the government bringing down its stake in public sector banks. All corporate industry bodies believe that that is the answer to India's banking woes. What has been the response from the government? Because so far, the government has very categorically maintained that there is no political or public appetite to do so.
Actually, I must qualify. What you said is correct, but what we have done at FICCI has actually come out with a more comprehensive and a nuanced answer to that. We believe that India needs few public sector banks. We don't need so many public sector banks. So our current recommendation to the government is you keep 3 or 4 larger banks, like State Bank of India is a great institution. Merge a few others into this 3-4 banks, and another 5 or 7 you can privatize. The advantage of that is not privatization. The advantage of that is government resources and bandwidth can be focused on 3 or 4 larger banks, which should be the PSU universe for the government.
Okay, so you're saying that retain some of the large public sector banks like State Bank of India, merge some of the smaller banks into them, privatize some 5 or 6 others. But Mr. Shah, if I can quote to you, and we did that at the start of the show, what the All India Bank Officers Confederation has stated, and get your response to that. They say every year banks are writing out thousands crores for corporates, which is the biggest scam. FICCI and ASSOCHAM should ask their members to be honest and repay the loans instead of demanding privatization. Just 12 NPAs account for an outstanding of 2,50,000 crore rupees. 84% of the NPAs belong to the corporate sector. There is truth to this as well, Mr. Shah. How do you respond?
See, I do respect the views of the bank employees, and we should remember that employees are one of the stakeholders in a bank, but there are many other stakeholders, and especially PSU bank, even the taxpayer is a stakeholder, but we have customers, we have depositors, we have borrowers, we have government, we have the common taxpayer. They're all stakeholders, and what we have seen is over the last 10-15 years, there has been requirement for periodic recapitalization of the banks, of the PSU banks, and one of the reasons for that has been, governance and risk management issues, because when government has so many, any shareholder or any owner of any institution needs to focus on governance and risk management, but when there are so many PSU banks, that obviously bandwidth gets stretched and gets diluted a lot. So it is very important to keep a few of them. So I agree with employees that we need some, good banks in the PSU universe, but a lot of them can be privatized. And the question to ask is, if we have seen the benefits of the private sector creating value in the banking system, why should the government not maybe privatize a few banks and enjoy the rewards as a shareholder, so that ultimately the taxpayer also benefits from that, because government has done more than 2.5 lakh crores of recapitalization in banks, and this is a big call on the exchequer, so that has to end at some time.
Let me go back to my first question, sir. And, I was chatting with Uday Kotak as well, and he said there's been enough talk on this issue, and now the question is one of action. But where is the political appetite? I mean, bringing down holding in IDBI Bank was something that the government stated. It was a commitment that the government made. We haven't seen any forward movement on that 2 years after that commitment was made. The finance minister has also stated categorically that he is not in the mood to consolidate weak banks, so he will need to wait to see banks getting healthier before any consolidation takes place. So then where do things How do we move forward on this grand idea of either privatization or consolidation?
See, I think answers are not easy. Obviously, the bank, nationalization happened about 40 years ago. There is history of 40 years. There is a lot of legacy around that. But if any government has taken hard decisions, I mean, imagine a government that has brought in GST, that has brought in IBC, that has brought in real estate bill, that has done, demonetization. These were not easy decisions at all. So our feeling is, if there is any government that can make difficult decisions in the interest of the overall economy, it is this government. We just have to keep it high up on the priorities. I know that you met with, being so close to elections, which are about a year away.
I know you met with the finance minister today, sir. Did you get any indication that he is willing to move forward on this?
I think the finance minister is very consultative. He wants to hear all sides of the argument, and our belief is that he will consult, he will look at, because ultimately the job is to trade off various interests and various conflicting needs of this. But I think the need that we need fewer PSU banks which can be strongly governed, which can be strongly managed, where the culture can be, strengthened, is the need of the hour. I don't think there is any doubt on that. How to do that is obviously a key one. Also, we spoke about the need for corporate India to also strengthen its corporate governance, its ethics and all that. And we at FICCI are very sensitive to that. We do tell all our members that I think India is growing. We need to up our corporate governance standards. We need to strengthen the oversight, risk management inside the companies. But as you know, the cases like Nirav Modi and all are a few stray examples, and we should not paint everybody by the same color because of a few examples. But I think on the whole, in the last 10 years, we see corporate India governance and ethics have come a long way, but we need to constantly enhance that. And we should use this episode to reiterate that corporate India also needs to work and strengthen itself.
Well, I don't know whether it's a stray case or not. If you look at the willful defaulters list across banks, it would not give you an indication that this was in fact a stray case. But calling for a graded approach for the government to bring down its holding in public sector banks, some privatized public sector banks, some privatization and some consolidation. That's the road ahead that FICCI has presented to the finance minister today. Rashesh Shah, always a pleasure. Thanks very much for joining us on India Business Hour.
Okay, Shireen, thanks for taking us through that interview. For now, let's move on to another big story from the financial space. The Reserve Bank of India has launched an ombudsman scheme for non-banking financial companies. Now, the ombudsman scheme will provide NBFC customers a cost-free and expeditious grievance redressal mechanism. So, if you are a depositor or a borrower in an NBFC, you now have the NBFC Ombudsman to resolve your complaint against the company. In stage 1, the scheme will cover all deposit-taking NBFCs. In the second stage, the scheme will cover all NBFCs with asset size of 100 crore rupees and above. The scheme will be operational by the end of this month for all deposit-taking NBFCs. But let's get you a CNBC TV18 exclusive. Fortis Healthcare has a new suitor. According to sources, Malaysia-based healthcare company IHH has re-entered the race to buy Fortis Healthcare. We also learn that Fortis lenders now have a say in the deal after the invocation of the pledged shares. Responding to CNBC TV18 queries, both Fortis Healthcare and IHH said that they did not want to comment. Time now to shift focus to Insolvency Corner. Anil Agarwal, the chairman of Vedanta Resources, met Finance Minister Arun Jaitley today. He told us that after the meeting that they are interested in acquiring debt-laden electro-steel steels and have already placed their bids. But Agarwal was not the only one to visit North Block to meet Jaitley today. Lakshmi Mittal, the chairman and CEO of the world's largest steel company, ArcelorMittal, was also present. Mittal feels that his company is a fitting buyer for SR Steel, as he believes that they can create value in the bankrupt company with their might and their experience. His meeting with the finance minister comes amidst controversy over ArcelorMittal's bid and eligibility for the bid for SR Steel, given its investment in Uttam Galwa, which it exited before the bids. Listen to what he had to say.
We have put in a very important and well-planned bid for SR Steel, and we think that we we can create value in this company with our experience on a global basis.
आप लोगों के जो बिड्स थे, बिड्स को अभी तक रिजेक्ट किया गया दोनों के, सर के और आप लोगों के भी, तो उसके बाद क्या कहना है, क्योंकि दोनों को क्वालिफाई नहीं पाया गया था?
नहीं, अभी तक जो हमने सुना है उसके हिसाब से कोई भी बिड रिजेक्ट नहीं हुई है। रिजोल्यूशन प्रोफेशनल्स आर स्टिल, वो लोग अभी भी स्टडी कर रहे हैं और हमें उनके डिसीजन का इंतजार करना चाहिए।
So Bhushan Steel and other companies are also under hammer. Are you looking at putting your expression of interest for those as well?
No, we have put in our interest only in Hisar Steel.
Well, the Supreme Court has directed the government to set up a panel to suggest reforms to the regulatory mechanism that governs multinational accounting firms in India. The Apex Court has passed this order after hearing a public interest litigation. The PIL had alleged that failures and malpractices within the auditing community have led to losses to investors as well as the government. Now, the Supreme Court's order has come about a month after the government's decision to rejig FDI norms with respect to audit firms. Last month, the central government had tweaked those norms, stipulating joint audits for Indian investee companies in cases where the foreign investor wishes to specify a particular audit firm having an international network. Two auditors cannot be from the same network. This is as part of the FDI policy that was given Cabinet's approval a short while ago. What are the implications of what the Supreme Court has said today, and what are the issues that we now need to look at? Joining me to discuss this, Vishesh Chandiok of Grant Thornton and former member of the Central Council of the ICAI, Jayant Gokhale. Gentlemen, appreciate you joining us here on the show. Vishesh, let me start by asking you, this is a matter that goes back several years, a matter that goes back to when the Satyam fraud came to light now. In light of what we've seen from the Supreme Court today, what is the way forward in terms of this so-called regulation of multinational firms?
Yes, you're quite right. I think this is a matter that goes back and has been under debate for a while. It gets opened up, and then a committee gets set up, and then nothing happens, and then again gets opened up after a while. So I'm delighted that the matter is being opened up again. I sincerely hope that this time it will be concluded. I think the matter in question basically is that there are many Indian audit firms, some of which are affiliated with a multinational audit firm, and out of that subset of those that are affiliated with a multinational audit firm, there are only a few, very few, 2 or 3, that use an international brand in India. Basically, what this panel needs to look at is whether we should allow using an international brand in India to everybody, who, and therefore firms can use the brand, whichever brand they want, just like companies can choose, whichever brand you want, or stop allowing any audit firm from using any brand that is used by another audit firm elsewhere in the world. And I think both those are well within the powers of
in an era of globalization where we're talking about opening India up to the world, is the latter really the option that we should be considering?
I'm not concerned, as I said, between the two. I think, what we need is a level playing field and clarity so that all market participants can have an understanding of what's going on versus this, ambiguity, this ambiguous world that we live in currently, where, all the 100 global firms, have some sort of alliance with Indian firms, but, at the same time, only a few use the brand. There are multiple legal entities. And I think, the summary of all of it, Sharon, is we would like the regulator, whoever the regulators are, whether it's ICAI, whether it's NFRA, whether it's MCA, to have oversight over the entire business of those firms versus have oversight, only over the audit firm and, all the other big, consulting, internal audit, all the other work sits outside. I think it'll benefit everybody if the regulators have oversight over the entire business.
Okay, so oversight over the entire business and clarity and providing a level playing field, that is the need of the hour, according to Vishesh Chandiok. Mr. Gokhale, let me ask you now, and as Vishesh was pointing out, there have been several committees, including the Ashok Chawla Committee, the recommendations of which have not been made public. What, to your mind, in addition to what we just heard from Vishesh, is something that the ICAI as a regulator or the government, the Ministry of Corporate Affairs now needs to look at in light of what the Supreme Court has said?
Well, actually, Vishesh touched upon the subject of level playing field. I think the basic issue stems from there. Because, as you have seen, I do appreciate your point that in an era of globalization, whether this sort of restrictive approach would be beneficial. And this is the argument that has been sort of made out on numerous occasions. The problem really is that ICAI's regulatory jurisdiction comes across only in regard to what is the traditional area of practice. Undoubtedly, consulting is also part of that practice. But when that the gamut of services that are rendered by the multinational entities are often into numerous related areas, and it's extremely difficult to have a regulation that's like one size fits all. And therefore, it's imperative, and this is what the government has recognized, it's imperative that one needs to have some sort of a level playing field approach. The best way to do it is to develop internal capabilities rather than to just say that, okay, throw it open. Just like, to take an example.
No, when you say...
all of us agree that we should have a
when you say develop
open
internal
market.
capabilities, what do you mean?
Complete this. No, my point is, we have not opened our markets entirely for Forex, have we? We have not. We have gone for graded opening up. This is precisely what is needed for the profession also. Yes, please, you are saying something.
No, I'm saying that, for instance, if we take a look at the cabinet decision, which has said that if a firm wants to appoint one of the big four, then it needs to bring in a joint auditor in the form of an Indian firm as a second auditor. So would that not then qualify as a graded approach that you just alluded to?
Exactly, it would. Yeah, that's why it is welcome. However, there is also, what has been read between the lines, and auditors are the first ones to do that, that it doesn't necessarily mean that you cannot have two multinational firms also. It's only that you therefore mean that the members from the same network cannot be joint auditors. It could be that two other firms, not necessarily in the big four, but possibly amongst the big 10. What it implies is that without a foreign brand to back you up, the domestic firms do not get a level playing field, which is also okay, we are better off than we were before, but we are still not where we should be.
You think whenever there is foreign, if I can just step in here, so that requirement is not when there is a big four or an Indian firm. I think basically it says when there is a foreign investor who has specified an auditor, whoever that auditor is, could be even an Indian auditor, you would mandatorily need a second firm. And I think that basically is trying to address something that Europe did some years ago, where Europe banned these so-called big four only clauses. Very often you had investors and otherwise specifying, an auditor, and usually just happened to be a generic, word. And I think that's the direction that the Indian government is trying to do. And I think that's a very smart way to address that issue. Also, China is trying to develop 10 domestic firms, which it wants to be global firms, very much in line with what, what our Prime Minister wants. And I think all those things should be encouraged. The Indian market needs, at least 20 mid to large size firms. And
so you're echoing Jayant Gokhale's point there on level playing field as well as developing domestic capabilities. I'll end then by asking you, Mr. Gokhale, we don't know what the government's approach is going to be, because this is a directive from the Supreme Court that's only come in today. We haven't heard from either the government or the ICAI. But in terms of next steps now, what would you suggest, sir?
Well, I think actually they are moving along the right track. What they need to do is further boost internal capabilities. The biggest reason is not, as often perceived, is not that because we want to protect certain people or give preference. It is because if we go to a situation where it's a too big to fail sort of concept as we have in the economic scenario, if you've got a limited number of players, it becomes a semi-monopolistic market where you cannot afford to have one big player fail. Like recently there was an order in regard to PwC. Now what happens is if your choices get order by SEBI in regard to PwC audit function, what really happens is as your choices get narrowed, it poses a threat to the economy, especially because when I say economy, I mean the capital markets functioning, because your choice is narrowed down to maybe 2 or 3 options. one firm may be already consulting and therefore ineligible. Another firm is struck off from the eligibility by SEBI. So your concentration of economic capability is pretty dangerous. So from that perspective also, I think the government is treading the right path. It actually needs to accelerate in that direction, and I think it's all for the best.
Well, gentlemen, we'll leave it there for today, but this promises to be an issue that will require much more debate and discussion. We will get you both back on, but thanks very much for joining us with initial reactions to the directive that's coming from the Supreme Court in this matter today.
Okay, Shireen, thanks for joining in with that. Now, take a look at the flashes on your screens. We were talking about how the MCA had both the NCLT seeking attachment and freezing of movable and immovable properties of Nirav Modi and Mukhe and his associates. And now we have gotten the confirmation that NCLT has granted interim relief to MCA under Section 221 and 222 according to the Companies Act in the Nirav Modi case. Let's get the details. The next hearing is going to be on the 27th. Utkarsh, what does this mean? An interim relief has been granted. So can I assume that what this essentially suggests is that they can attach the assets, but they can't go ahead and say sell them or do anything with respect to those assets?
So, Kritika, when we speak about freeze, so they haven't been granted attachment. What they have been allowed is a restraint. Now, what happens in restraint is that they cannot really touch or do anything with that property. That once the property is attached, it becomes the property of the court, and there is no owner of that property. Now, in the case of restraint, they become a notional owner, but they cannot really do anything about the property they own. Now, and also what is very important is what is there in the Section 222 of the Companies Act, which will suspend the trading of securities Gitanjali Gems. And this is not only it. What it does is that all the companies, all the 64 respondents. In fact, we are waiting for the list of the respondents which are there, which we are hearing is that there will be partners also of these companies which can be involved in this, but especially Gitanjali Gems, they cannot be allowed to trade in securities, and all these people who are holding any kind of securities in their companies are also not being allowed to trade anywhere. So this is a big win for MCA. MCA argued in the morning, stating that this will give them the liberty to investigate freely because they had to really go to the beneficiaries of this whole case. What this has done is that all the properties, movable and immovable, of Ami Modi, Nishal Modi, Nirav Modi and Mehul Choksi will be frozen. But the moment this order really goes out, all the properties stand frozen, so they cannot really sell anything, they cannot really do anything with the property. They're just notional owners in this case. So big win for MCA. They had moved in the court in the morning, and this is what we are picking up. What we are waiting for right now is the list of the respondents, which will come to us anytime soon.
Okay, Utkarsh, I have a few more questions for you. Just hang in over there. We have HP Ranina joining in. Mr. Ranina, interim relief has been granted. The NCLT has allowed MCA to freeze assets, movable and immovable, of 64 respondents in the case, and this includes Nirav Modi, Ami Modi, Mehul Choksi and Nishal Modi. Big setback for Nirav Modi, or is this just what could have been procedural?
Well, this was obviously expected because obviously there is no doubt that the man has been absconding. So in such a case, the NCLT has no option but to agree to the freezing of the assets. Of course, it's an interim order, and ultimately the party will be asked to prove the source of his funds and his income. And if he cannot do so, then the freezing order will continue. So obviously this was expected, and it's only the beginning of the long haul of litigation which is now going to start.
Okay, Mr. Ranina, we are completely out of time, but we will take the discussion forward in the next few days. Very, very important move coming in. We will have to, however, slip into a short break, but stay tuned. Coming up next is an exclusive interaction with the Uber's global CEO who wants Uber to become the Amazon of mobility. Stay tuned for that.